Hi, I'm Lightfoot-Brown, Research Analyst at Chelsea Financial Services. We're joined today by Richard Hallett, Manager of the Marlborough UK Multi-Cap Growth Fund. What are the characteristics you look for as a growth manager in your stocks?
Well, for the Marlborough Multi-Cap Growth Fund, we're looking for UK companies that have a sustainable competitive advantage. This means that they should be able to grow their profits irrespective of the wider economic climate. That competitive edge that we're looking for might be an innovative new product, a better management team, or indeed just a superior branding which consumers love. But all too often we find it's a combination of these sorts of factors. Also very important to us is the kind of sector that these companies operate in. We're looking for some kind of leadership position in niche sectors where there's limited competition, but crucially are benefiting from long-term structural growth trends, what we call secular growth. And a good example of this is e-commerce. So the fund has about 50 stocks in it, which is a pretty high conviction approach, but we have the flexibility to really roam about the market cap spectrum and really hone in on those stocks which have got the strongest potential, irrespective of their size.
And can you sort of give us maybe an example of a stock that shows off your process to get down to those 50 names?
Yeah, sure. I mean, one of them is WorldPay Group, which is actually a global leader in payment processing technology. And this is used in all sorts of online shopping, which is really benefiting from this move towards e-commerce. WorldPay has recently merged with a company called Vantiv in the US, and so it's given it really important sort of scale benefits on a global basis. But more importantly, we see payment processing in a long-term structural growth phase on the back of this move towards e-commerce and also secure payments. But another example may be a company like HomeServe, where we've got a very large position, which is a provider of home insurance policies to homeowners. So if you're a member and your boiler breaks down perhaps, then they'll sensibly be able to fix it for you. And we see some of these support services businesses in a particular sort of good structural growth phase at the moment. But lastly, another example may be the Prudential Assurance Company, which is a global financial services business, and that really is benefiting from this longer-term growth of the middle class in emerging market nations. And it's seeing really powerful growth in Asia at the moment, where a rising number of middle class consumers have got a real appetite for its insurance and savings products.
So what is your current market outlook? What are the sort of key themes that you're considering at the moment?
Well, I mean, one of the aspects of our approach is that we try not to make investment decisions based on economic forecasts, because we find that they're so hard to do on a reliable and consistent basis. Much better to try and select stocks that can grow independent of the economic environment. But we do, of course, keep an eye on the wider economic picture, and we are pretty supportive on what we see out there, albeit that there are rising concerns about trade tariffs and Brexit uncertainties, and indeed also interest rate rises in the US. But aside from all that, we look back and we see economic forecasts showing 3.5% growth plus on a global basis, and we think that's a pretty supportive backdrop.
Great. Richard, thank you very much.
No trouble. Thank you.